Good morning, everybody. Happy Thursday. Welcome back. Daily Profit Plan. Little head spinning switcheroo there. Classic taco trade. Market had a really crazy afternoon. It was, 100 plus points to the upside, and then faded a little bit. I think we had a top around 69.10 yesterday, faded down to close around 68.75, 68.76. We survived the daily profit play by the skin of our teeth. That 68.85 by 95 did work out. I was watching that very close to the defense trades. I ended up grabbing a couple extra bucks yesterday. So I had a defense trade that was in for 25 cents. I closed it for $1.80. So I made $155 on that trade. I was still in for the full $1.40. That was a winner. So that'd be another $1.40. So I'm up $2.95 on the day. And I gave it back with let's see, I think I gave it back with a 15%, or I'm sorry, a 15-cent debit. And I gave it back with another 25-cent debit. Actually, it'd be a plus. So plus 0.25. So net on the day was $255. And I mean, what a wild day it was. Now, market makers, we had a plus minus 53.40 yesterday at the open. And that was, pre-market. We just kind of had that number in mind. There was a little bit of volatility, but it did fade pretty hard all day, especially on that rip in the afternoon. And so the market opened and settled around 57 points. Now, I'm not saying that's perfect. That certainly isn't within the market maker move, but guess what? When we have a plus or minus 53 and our trades were at 65 or 70 above, we got paid. So that, 60, what was the open price here? Open was 68.17 and our strike was 85. So we were, 68 points higher, and it worked out because the market was at 57 points higher. So it felt good to survive it. I was actually a little miffed in the afternoon. Like, are we going to have like an upside risk day where this thing gets to, if you remember calculating out the 69.05, how many of us recall that number? We used the VIX. We calculated out 69.05. I said, that's probably going to be the top of the day. What was our top of the day? 69.10. So we weren't that far off, right? Now, the good thing is it hit the high and it certainly didn't stay there. So I had the defense trade stacked in there. So unfortunately, what I really would have loved to do yesterday would have been either one, sell a 69.05 by 69.10 bear call spread and try to get like 2 to 250 on that trade. That would have been a great trade intraday, but I was stacked up with some butterflies that didn't allow me to do that. I could have, it just would have overlapped my strikes, which I didn't want to do. Also, Tasty had some outages yesterday that were fixed later in the afternoon. So while this was all happening, I'm trying to think what time I had another call into the trade desk. I think I posted on Telegram what time they resolved it. It might have been around like 12 p.m. or 1 p.m. Eastern time. So anyway, all good. How did we do yesterday? Annie in the house. Good morning, Patrick. Hey, Donna. Hey, Michael. Jim's here. Greg and Bill. Great trade. Why did you close the defense trade? Well, because the defense trade was, look, I wanted the defense trade open for that potential upper risk. I mean, for a moment, how many of you were watching the trade? I mean, look, man, this is zero DT. It's like I didn't want to bail on the defense trade when it offered up 400. It was what, 1475 a potential profit. I mean, when I closed it, I took it for a tiny little win of like $150, $160, which helped, but it was trading up to 350 bucks a profit at one point yesterday. So if that's where I was going to close it, that still was not enough to cover my risk. So the net result on the day is, look, it didn't matter if I closed the defense trades for a little $100 or so. The real trade was, even if we lost on the defense trade in full and you lost in the defense trade here, you still made $100. So, I mean, the goal was yesterday, if we win the daily profit play with our defense trade, we still make $100 on the day. So even if that was your net result, great. But the defense trade up here, the reason I wanted that trade on was because that was offering $14 plus of protection on an 860 risk. Okay. Now, I will say this, it is a little bit easier to calculate the top and call the top because look at the VIX yesterday. Okay. The value that we used for the VIX was the 20.88 or 20.87. And the VIX yesterday, this was your when we gapped up, the market was, I'm trying to think how this played out. So this is where we kind of started out yesterday's trading. We started out with the gap higher. So the gap higher in S&P was starting to retreat the VIX. And then the fall to nearly try to fill that gap was the rally in the VIX. And then that afternoon rip to new highs was the VIX getting pummeled right back down. And vol suppression that I keep talking about, it is alive and well. And this is that coin flip where if vol suppression is ceased, then we rally up into the 20s. If vol suppression is alive and well, that's really a line in the sand that continues to get defended. You saw vol suppression when it got up into the 20s during the holidays. I was not trying to, I was really just trying to sell premium, like way out of the way. And that helped. But it's hard to call a bottom when the VIX is going like this. Okay. It is easier to call the top when this is your top in the VIX and it's going down. You can do that calculation like we do every single day, which is my daily profit play indicator, as well as the VIX rule of 16. Does that make sense? Okay. Stephanie says, held my breath for a while. Got the trade back into the range. Yep. Holding 68.70 by 75. That's the monthly one, right, Michael? Yep. Okay, good. Nice win, Greg. $800. Awesome. Let's see here. Got $400 from that call trade. Great. Good. Is it too late to enter the profit trap yesterday from the afternoon bonus trade? You talking about the one I didn't build a trade there, Ronald? It's certainly not too late. I would say you can probably get more premium for it, though, because we're going to gap higher today. Let's take a look at it. If you like the build a trade, you could probably get better premium than I did. I'm risking $335 to make $165. If you can get that thing to trade over $2, I think that's a great trade, especially with the $1,000 profit trap. Kirk says, how'd you make 180 on the flight? Well, it was a 25-cent. This is what happens with the butterfly spread. So yesterday's trading, let's pull those exact levels. So we had, the blue line right here, if you were in the session yesterday, the blue line was my call side spread. And this blue line was my put side spread. That was for daily profit light. Now up above, my high here was 60. I need a price to stay below 68.85. Okay. My calculation for the top of the day was 69.05. So what I did is I put in some defense trades where we did 69.10 by 69.25 by 69.40. Okay. Which is well above the top that we called. But what's nice about this trade is during the day, a butterfly trap that looks like this at end of day, during the day, what you have is you're not going to get the full profit trap here, okay? But what happens is the left side of this butterfly starts to go up during the day. So when price was going towards that area, now it doesn't have to be exactly at 69.25 because obviously we didn't hit that. We hit 69.10. But this raise in profit, that was a 25-cent debit that could pay up to $1,475. So even if this thing goes a little bit my direction, this was allowing me to capture, $200 to $300 of profit. And as the day goes on, the left side of this fly gets narrower, the right side of the fly gets narrower, and then I have to have it inside of these strikes. This had to be at 69.10.25. This had to be at 69.39.75 in between there for this to be any type of profit trap at expiration. Okay. So when you see these butterfly spreads, what's nice is you actually have a wider net. Even though you're going to sacrifice some of the peak profit here, you can have a wider net. So even though this was 30 points wide, from this level to this level was 30 points wide, what's nice is during the day, it was potentially 40 to 50 points wide. Okay, and that's how I end up grabbing some of that profit. Now, full disclosure, if I did not take the profit on this trade, I would have lost 25 cents. Okay, but I still would have made $1.40 on my daily profit play, which was what I planned to do. And the reason I didn't issue this as an alert is because I really was under the impression yesterday that I'm like, I'm going to take this profit and I know that I could regret it. Because if we finished, this was a big if, I saw this gap, just like all of you see the gap. If we finished the day around that 20, 30, 40, and I took that trade off the table, I was still risking $8.60 of my daily profit play. Like I was fully prepared yesterday for I'm going to freaking lose to the upside, right? The market's going to be above 68.95 and I'm going to get busted up on that 860. And then I take the profit on my defense trade and I'm pissed at myself for, not holding it longer. So that defense trade to me was like, I don't really want to take the profit right now, but I'm like, if I'm going to lose 860, but I can reduce it by, $160, $170, at least it's a little bit more manageable. So that's why I took the profit. And obviously, watching it to the close, I would say, the market. I'm not going to say we got lucky. It did what it should have done as far as closing within very close to that market maker move, expected move. I mean, it missed it, but still by like 3 or 4 points. But that helped us, and we ended up getting the trade. So look, in a 0-day environment, there's a lot going on. That defense trade was designed to be fully protecting our 860 risk. And so when I took profit on that, that was completely subjective. I didn't think that was a good trade because I was fully braced for like, if I regret that defense trade closing, that would have been able to help you offset the entire trade of daily profit play, the one that I did for 10 wide. So that's why it wasn't like an issue to alert, because also it's slippery. It's like I saw it trading up to $300 some dollars. Why would I be? I would have been much happier closing it there, but I didn't. I mean, I watched it doing this when it started to slip later. When it started to go back down, I started to take profit because I didn't want it to turn to nothing. So I just grabbed a couple bucks. Okay. All right. Let me see here. Gary says, been a while. I played the daily profit yesterday. I'm not sure what you mean. I played the daily profit play yesterday 3 times. So what are you saying? You just took 3 individual trades? 3 separate trades. I mean, it depends on where and when. Because I know some of the big traders that have been doing this with me for a year plus. I mean, a lot of times what they'll do is they'll set the trades up from the very beginning of the morning, and they will do. Let's kind of have a walk down memory lane here. So here's where we opened, right? Here's where we opened, and I'll have traders that will stack up like they'll have a sell call level here, here, and here, and then a sell put level here, here, and here, and they'll stack in multiple trades. Now, if the markets do what they're supposed to do efficiency wise, then guess what? They're all winners, right? The whole trade is a winner, and they stack up several. Now, that is fine as long as you look at what I always say is the risk. What is the risk? Okay. So daily profit play, to me, I don't love to trade late in the day because what happens to the expected move? The expected move late in the day is pure gamma risk. Like, is the market supposed to do this type of stuff? No, this was like an outlier type day. Even though it finished just a couple points off of the market maker move or the expected move, this is insane, right? The market was up 0.84% intraday. Okay, this wasn't just like, oh, it gapped up. No, it was up with price action during the day, 0.84%. Okay, that was already exceeding the entire expected move. And then it proceeded to drop over 1%, 1.03% to the downside, 71 points back down. And then it went all the way back up 1.53% and then proceeded to fall. That's over 100 points yesterday. And then it fell another 30 plus at the end. That is ridiculous amounts of volatility for one trading day, right? And if you're trading late in the day with daily profit play type of strategy, you're not going to have the freedom or flexibility. The broker's expected move is going to be a tiny little move late in the day. It's not going to be a 100-point move, not even close. So if you want to play multiple times, pick your battles, pick your times, be quick to get in and out. Otherwise, you kind of had the plan in the beginning, because the point is the whole market from the open, the efficiency is we should have been no further than that plus or minus 54, and it was at 50, 57. But we're not trading right at 54. We're not trading right at 57. We were trading like 70 points higher and 70 points lower, and therefore we carved out a win. Okay. As one would close, I would start pinning. You're not pinning a daily profit play there, Gary. I'm not sure what you're talking about. Pinning is a butterfly spread, dude. Are you talking about butterfly trades? Those are very different. That's not a daily profit play. Daily profit play is iron condor. So I think pinning is the wrong word to use if you're trading an iron condor. All right. Well, that's not pinning. That's just trying to, stay out of the way, right? Your iron condor is all about out of the monies. Stay out of the money. Stay out of the money. You don't want price to test your highs and lows. You want it to stay away from it. Pinning is where you're trying to get price to go into, the price you want. That's the butterfly stuff. So do we have a pin yesterday? Not really. I mean, our plus or minus gamma level was 68.45. We blew through that yesterday, came back and gap filled. I mean, this is such an inefficient move here, and yet we are higher today. Look at the S&P this morning. Okay, I mean, we closed. Let me go back to this. So we closed at 68.75. Let me update this for our tracker. 68.75. So I put in the notes here in the ATR tracker for the daily profit play spreadsheet. Volatile day. Trump comments on Greenland. Speaks at WEF, which is the World Economic Forum. Markets ripped late in the day, but settled below our call spread for a full winner. So did it stay between our ATR levels? No, but it was a winning day. And this morning, things are going to be gapping higher. Futures up 0.68%. Okay, so where does that take us? We're probably coming for that gap. Okay. So for this gap, that gap is 0.95. Okay, 93.94% away. If we're going to be up to 0.6 something today, I mean, let's see what happens. So everyone that was asking me about the bonus trade, okay, the bonus trade. So I put in a build a trade yesterday. Let me see if I can bring it up here. Also, I kind of have a trade idea on Pfizer. This is probably good something for Project Options Edge, but if you're interested, if you don't mind owning some shares, Pfizer's cheap enough. You get a 6.6% dividend. This is a stock that I don't mind having. Fair value and discounted cash flows, like a $50, I think it's $56 position as far as price targets. We're trading at like $25, $26. I could do a 25 put, a 23 put, and a 20 put. Be willing to own up to 300 shares. Cost basis wise, that would be, I think I'd own it at 21.66 times 300. So if I allocated about $6,500, I've got a decent dividend on this. And also if price goes up, I think price can get to like $30 to $35. If we get a $10 move on 300 shares, I've got $3,000 on top of my $6,500 investment. I think Pfizer can legitimately, return on investment wise, give me about a 46% return. So and that's not counting a dividend. That's just talking about price appreciation. I would be very happy with that. That's if we get the shares. If we don't get the shares, we just take the income. So I'll talk about that in a little bit for maybe a setup on Project Options Edge. That would be definitely more of like a campaign trade because I've got to be willing to put in the puts, collect the income, watch my levels. If I take assignment, we got to know where the break evens are, and then we start looking for repair trades. But with 300 shares, I mean, we could probably repair for $500,000 pretty easily. All right, let me go to SPX pre-market today. We're looking at a plus minus. I've got 38.03 today. I wanted to look at that bonus trade. So I put in here build a trade. Right here in build a trade, it's a 69.30 buy call, 69.40 sell call with 2 strikes because I'm doing a broken wing, and then I skipped out to the 55. So let me build this out. I'll show you what this thing looks like. So I buy the 30, I sell 2 at the 40, and I buy the 55. Okay, so let me type this on the screen so it's clear. Now, this trade yesterday, I got filled during the build a trade session with Nate at a $1.65 because we're gapping higher. This probably is trading for a higher premium, which means you can take on less risk. I still like the trade, or even moving the strikes up by 5 or 10 points and trying to stay a little bit further out of the way. I still like the structure of the trade. If we go up that 0.9% or so to fill the gap, my break even on this trade is 69. It's going to be 69.51.65. So my trade, and I filled this yesterday, so we'll see if this is a better trade this morning because of the gap higher. My trade was buy the 6930 call with 1 strike, sell the 6940 call with 2 strikes or 2 contracts, and then skip to the 69.55 call with 1. I collected a $1.65 credit. Okay. Now the 30 and 40 is the ramp up profit trap that by the time we get into expiration on the end of the month, so out to January 30th, if we are below 69.50, I have profit in here. See how my break even is 69.50. It's actually, so my break even is going to be 6951.65. That's my break even. So if we are below 6951.65, that is break even or better. If we are back to, let's say, 650, 6950, if we're 6950, I'm actually in this profit trap from 50 all the way to 40, all the way to 30. This could all be profit trap potential. Okay. Now, the reason I kind of like this, and it's not a guarantee. Obviously, I know the market might poke the highs at 69 freaking 85 again. Maybe it pokes the 7,000 level. Okay. So the risk on this trade is, the way I have it set up right now is my risk is 3.35. That's max risk. So if I'm dead wrong and price is above 69.50 by expiration, I'm risking 335. I think this morning you could open this trade up if you like it for less risk because you're going to get a little bit more premium on the trade. Let's see here. If SPX is less than 6930, I keep the $1.65. If SPX is 6931 to 6949, that's a profit trap. So and it's not all paying me, but like every dollar. So 69.31 is going to be $100 bonus trap on top of the $1.65. 69.49 is going to be a profit trap, right? And then 32, 33, 34, 35, 36, 37, 38, 39, and 40, that maxes out at $1,000 profit trap. 41, 42, 43, 44, 45, 46, 47, 48, 49. That's all profit trap. So if I want to take this all the way towards expiration, then this trade could offer me up to $1,000 profit trap if we're around that 69.40 handle. But if it's at 35, that's still a bonus trap. If it's at 45, that's still a bonus trap. Right? So where's my risk? If price is greater than 69.55, then I have full risk. So full risk greater than 6955. That's where I'm dead wrong. And my max risk is 335. Okay. It's a 130 expiration. So it's SPX 130 expiration. Okay. And look, there's a lot of noise in this trade because we have the rising wedge structure. We got the breakdown. We got Mag 7 earnings next week. We got the Fed next week. We have all sorts of stuff that's going to keep this thing kicking around. And next week isn't actually, I guess it is. Next week will be the end of the month on Friday. So going into all the Mag 7 earnings plus Fed on Wednesday, we will see, what this situation looks like. But, at the very end of the day, if I'm wrong, I've got to define risk trade. Okay. And what is, why was I willing to take this trade? Nate and I talked about it in the session. I thought with that 10 wide profit trap and that gap fill, if I'm even remotely right on that rising wedge pattern, then we should be fading off of that 69.40 handle. So that's what I'm kind of hoping for. I could be wrong. I could be wrong. But if I'm wrong, I have enough profit in engineered options to obviously offset it. We've got a monthly trade fill. We got a weekly trade fill. We'll participate next week. So we'll see what that looks like. Okay. Can you do this with XSP? I mean, you can. It's just going to be less risk and less credit. So let me see. I mean, we can look at it this morning. So if you like the trade, then let's look at it fresh this morning because obviously you didn't take it with me at $1.65. It's probably trading for higher. I mean, I took the trade yesterday at 3:30 in the afternoon. We're gapping by 0.6+% today, which means that I'm taking a trade that's going to be even more, it's going to be more in the money. So I think we could probably see this trade maybe at $1.85 to even $2, which if I saw that trade yesterday, I'd still take it. 210. All right. Well, I mean, we'll know this officially in 3 minutes, Dan, but yeah, that's great. Groundhog Day. Yeah. We'll see if the markets see a shadow, huh? That's actually my cousin's birthday. That's always funny at a Groundhog Day birthday. All right. So I posted that in Telegram. And this morning, if you like the trade and it's offering over $2, I think it's a good trade. Two things you could do. You can keep the same strikes I keep, or you can go even higher, right? You can go even higher. Because I don't mind if I pull in $1.50, I'm risking 350, but I want the mechanics of the trade, right? So let me see what it looks like if I go to the 30th, price in maybe the high side. So this is my trade. There's my 30, there's my 40, there's my 50. So buy, sell, buy. Yeah, that's weird. We'll see what that offers up this morning. But I was going to say is going out towards the expected move. I did like 69.90 by 7,000 by 15 like this trade for. I mean, I might take another trade and just do it at the top end of the expected move, right? So that would help me kind of offset some of the risk if I'm wrong here. I can offset some of the move. If we get to 7,000, I'd love to freaking pin it, you know? So anyway, we'll price a couple of these out. I'll see what it looks like this morning once we have opening bell. All right. Very quickly, SPX for the day, 3803. 3803. So we'll see what we have for a 0 DT for daily profit play. VIX is way down here, 1596 VIX, so we're just under 1%. Now, obviously, VIX can flare up again, 1596. We're looking at a 1% move. That's going to be on the extreme. We'll get a gap open. Futures up 0.63%. So once we get an open, measure out like a 1% for the top. I want to see what that 10 delta looks like, how far out point wise we are. We're clearly getting some markets like pressing the volatility. Like this move opened here, closed about 50 points lower. I think the plus minus that day, I don't remember what it was, but it certainly wasn't 50 points. The plus minus, because of that sell off and the gap, it's like we had a 50 plus point move expected yesterday. It went 57, which I would say is actually good. Like it's good that even it was just a couple points, but we're getting enough like out of the money premium here. And to be fair, like that trade yesterday, for $1.40, it's like at one point in time that trade was probably trading for like $5 or $6, because it tested our levels, and went through them. So anyway, all right, we've got opening bell. Price is up. I've got a 69.14 read. So we just gapped up by about 30 to 40 points right here. So market's open. Let me go up about 1%. That'd be our VIX level. So 69.83. That'd be the VIX around 15. What did we say the VIX was? About 1596. Okay. So that would be kind of our expected high of the day if it's going to keep going there. I want to take a look at our daily profit plays at the open. Right now we're showing a plus minus 25. Okay. I'm still going to keep that 3803 in mind and see if we can get some premium here. So we're at 25. I could go 60-ish. 60, 65. See if I can move this slightly lower delta-wise. 70 cents. If I want to go 10 wide. I mean, I get some premium there. That's a 10 delta. $1.40. I mean, that's the same trade I took yesterday. Let me check and see where 68.65 is on the chart. 68.65 would be making some fresh lows. I mean, from a technical side today, this is a pretty inefficient candle. I'm not saying the market's going to go after it, but if we hit this level and start to retreat, I could see us gap filling, today and, maybe staying, I'd hope efficient. But let's see here. Let me see if I can go. I mean, we shouldn't go above 85. 85. If I went 15 wide here, and then let me get the VIX low for the price down here, go 1%. 6805. That's way down here, man. 6805. Yuck. I'm trying to pick like something like way out of the money, out of the way, nice and safe. It's 15 wide, which I could pull in some more premium, but I'm only getting offered, 25 cents here. I don't want that trade. So I'm going to just let this kind of sit for a second. Just let me get my logic. So price closed here. Let's go down to 1%. 6806. And that's the 15.96 VIX. Okay, I'll recenter this at the 68.76 close. 68.76 close. Bonus trade at 220. Okay, let me look at that bonus trade real quickly. So I'll come back to daily profit in just a moment here. I want to look at that bonus trade to the 30th. So right now, this trade, 30, 40, 55 is trading for over $2 and change. Now that means your risk is if I get two, let's say I get $2, I'm risking 3 to make 2. Now look, if I just move the strike, okay, I still get over $2 and I just move the strike and save myself an extra $5 of break evens, right? Even here, 40 by 50 by 60, it's like I'm getting $2 on this trade. If I go 40, 50, 65, I mean, I like that trade better because I'm giving myself another 10 points of wiggle room. Now my break even is 69.60. Okay. If I do this trade, I'm still getting $2 and I'm 45, 55, 70. So if you didn't take the bonus trade with me, if I'm looking at it fresh today, I would take this trade 69.45 by 55 by 70, try to get $2. You're risking 3 to make 2, but you also have $1,000 profit trap. Does that make sense? So, I mean, again, I'm going to put here, and I'll just update this because I took the bonus trade yesterday. So bonus trade, build a trade bonus. I entered for $1.65 credit. We reviewed this morning, and if I were to take the trade from scratch again, I'd set up with these strikes. SPX 130 expiration, 69. So I'd buy the 6945. I'd sell the 6955. And I'd buy the 6970 for $2 credit. This is a great credit. $2. I'll put here income credit. Income credit, $2. Max risk is $3. Profit trap up to $10 from 6945 to 6955. I mean, really, you have I'll just put profit trap from 6946 to 6964. Up to $10 bonus at expiration. Okay. So I like this trade enough. I mean, right now it's showing $1.80. I might have to go back down. Let me take this. I'm going to take this on another account so that we've got some skin in the game. Let me see what this is looking like. So if I go 45, 55, and 70 for 40, 50, and 65. I mean, I'll take the trade here. I'm going to get $1. So you got to get $1.90. I got filled at $1.90. Can you get filled at $2? Can anybody get filled at $2? Let me try this at $2. So I'm going to go similar trade. I'm going to try $2. Let me see if I can get filled in this trade for $2. So it's working at $2. It's not filling. Try $1.95. Filled at $1.95. All right. That way I can make a trade here. So I posted. I'm going to go 195 credit filled. Okay, so I'm risking 305 is my max risk. So income credit 195 and max risk is 305. That makes sense? Again, it's a bonus trade. Where are we wrong? If price rallies hard and gets to all-time highs again by the end of the month, I'm wrong. Okay. But if we stall at a big gap fill and we have some, sideways chop, or maybe the Fed kind of expresses some concern, I have no idea, man. I really don't know. I think it's a fair trade based on a rising wedge structure. I think the market, if we stall or fall at all-time highs, this is the market kind of, maybe still, we could still finish a positive month, but just not be at all-time highs for January. And of course, I don't know. So it's going to be defined risk. Yeah. So January 30th expiration. I've got 2 trades in. I've got different strikes, obviously, but my pin price would be around 69.40, or in this case, the pin price is going to be at 55. So give myself just a little bit more income. Okay. Now I will take one more stab at this. And this one is going to be a pending, but I'm going to go, we're trading at 69.28 right now. If I were to go 10, 20, 35, let me see if this one will fill for $1.50. I'm going to take this trade. See if I can get $1.50. So if I'm wrong, that would be what? Risking 350. I'd be wrong for 350. Okay. Sorry for a buck. I don't want to risk 4. I'm going to try to go for $1.50 on this one. All right. So that's a pending order. And that's playing like the high end of the expected move based on current conditions. So 10 by 20 is my profit trap, and then 35 is my skip strike. So right now it's offering $1 or it's like 90 cents. I don't want to take the trade for 90 because I'd be risking 410 to make 90. I'm not interested. But if it gets up to $1.50, I'll take the trade. $1.50 or better, I'll take the trade. Let me see. Yeah, I think $1.50 is good. I'm going to go $1.65. That's 1/3. Okay, pending order. It's a broken wing butterfly. Okay. All right. Let me get back to daily profit play. See if we can carve out something today. I would try to bank on today being pretty efficient. We had a wild and crazy volatility day yesterday. So today, 65. Let's see, 69.65. We've been pushing up a little bit this morning. 65.75. So if I went 10 wide, I can get $1.10. I'm not in love with that trade, but if I just go 5 wide, I'm not going to get the premium that I want. I'm only getting 70 cents. So if I go 10 wide, I can get the trade, kind of bank on some market efficiencies. Where did we open today? Let me get the exact open price. So we opened here at 14. I saw plus minus 38. So let me do the math really quickly. 69.14 today. Minus 38. So it puts us down to about 68.75. That's in the way. Again, market efficiency, so it shouldn't be an issue, but I'm risking 8.85 to make that $10, $15. I don't love that trade. Fudge muffin, man. I don't know. I'm clearly hesitating a little bit. If I go 5 wide, I really don't have a problem with it. I think I just don't want to go 10. There's just a lot of defense I want to play when I go 10 wide versus 5. So if I went 60, let's try to get a little bit higher delta on the call side, maybe. check some gamma really quickly. So as long as my sell strikes above 69.50, which it's right there, okay. Let's see what we have for positive negative gamma, 68.70. Okay. I think we need to be, I hate to say it. I don't know. We need to be like, gosh, it's such a volatile market right now. Um, I think we need to be below like 50 or 40 on this thing. I think this is going to be one that I just sit and let it pend. I'm going to go 40 by 30, which is 10 wide. Okay. And I'm going to go up here towards the, let's go, gosh, 60 by 70. All right, give me $1. God, that's such a shitty fill. $1 is not that great. I'm risking 9 to make $1. I don't really love that trade at all. But I can obviously sprinkle in some defense if needed. All right, let me see if I can get a buck out of this trade. This is not my favorite by any stretch. If I'm going 10 wide, but I'm going way out of the money here. This is a 6 delta on the put side, an 8 delta on the call side. If I went 55 by 50 or 65, that's a little bit better. I just don't want to see price threaten to the upside again. You know? So I think this is the safer trade. Let me see if I get filled for a buck. And I will definitely include some defense if I need it. All right, pending order for $1 right now. See if this fills. A little bit of price action, like a little bit of direction should get us filled for a buck. What I should do, actually, you know what? Since we're going 10 wide, let's go $1.50. Okay, let's go $1.50. I don't like the 9. You know, risking 9 to make 1 doesn't sit well. Plus, that doesn't give me much wiggle room to defend. So I'm going to try to get this trade for $1.50. I feel better about that. Even if it's pending, I'll still take that setup. All right, so new trade. This is coming for Telegram members for Daily Profit Play. Today is the 22nd. Okay, it's in for pending. Where do you see the risk on the computer? You just have, it's just the math. So if I know that I'm getting $1.50 on the trade, it's a 10 wide spread. So 10 wide minus $1.50, 10 minus $1.50 is $8.50. So that'd be my maximum risk. Mark, what strikes you get there for $2? You must have went a little bit tighter than, yeah. Sean says, I've already had the strike at 69.55. Can I just lower the strike? Well, what's the trade you're talking about, Sean? You're looking at the bonus trade. You want to make sure with the structure of that bonus trade is a broken wing butterfly. So you still want to have the skip strike. So I'm going 10 wide and then 15 wide. So you did, okay, Larry, you did 69.60 by 70. Okay. And then 65, 55, 10 wide, $1.45. That's good. Okay. So your put size is a little bit higher than mine. I'm just doing a quick glance at the gamma. So, you know, if the market is going to fall back down for a gap fill, then yeah, I mean, that's 68.70. This inefficiency yesterday, if the market's going to chew into that a little bit, that's 50 and 40. That's why I'm putting my trade where I'm putting it. If we have some direction, the VIX is going to rally, then I think I can get filled at $1.50, and I think my trade's still pretty safe. We'll see. But I mean, we obviously need to see some direction pretty fast. If price is going to fall this morning, you know, fall back down to gap fill, something like that. If price falls back to fill this gap, then, you know, I probably get filled at $1.50, which means my 68.40 is here, and then my 60, what I do, 60 or 70 up here will be my 2 levels. So I need a bit of direction. 60, 65. Okay. So Sean, go back to your trade. What did you put in, or what are you looking for? I'm just trying to make sure you're going to maintain the integrity of that broken wing butterfly. So it's the 10 wide is I like it. I mean, going buy here and then sell 10 wider. So let's say this, I'll just say this is my trade. So 69.30, 69.40, that's 10 wide, right? And then I went above this to 55. So that's 15 wide. So that's how I can finance the trade for a credit. And I give myself a profit trap where if price is here, okay, if price is in from 30 up to 50, from 30 to 50, every dollar is a bonus profit, and it peaks out at $1,000 at 69.40. And if it's 41, 42, 43, it's $1 less, but I can still get, bonus trap in here. So as long as price is going to be at this gap or lower, then I can keep my $1.65. Or the trade I took today was bumping it up and I got $1.90 for it, or $1.95 for it. Okay. And we're up a little bit higher. Let's see here. What percent of the time do gaps fill SPX? Well, I mean, they fill all the time. Here's an easy way to think about gaps. Every gap to the downside that we've seen, if we have a move here and every gap to the downside, okay, guess what? That gap gets filled 100% of the time. You know why? Because if the market goes to all-time highs, every gap to the downside has been filled. I can't say the same about gaps to the upside. If we have a gap to the upside, it doesn't mean that it automatically comes back and fills it. However, would anyone be super surprised that you've got this bigger structure here and the market's like grind? If this hits resistance, we could just roll over a little bit. Okay. So, look, and gaps are because of the market's opening bell to closing bell. There's still a futures market that runs. If you want to see what does the structure look like with no gaps, look at the ES feed, right? There's no gaps on futures, but you can see how inefficient this is. This is an inefficiency move, which is why I think if we do make some directional pushes today, we're going to come back to this level. That's structure. Okay. If you want to see a different, so ES is the futures feed, SPS X500, that is the CFD. Trades very similar. There's your inefficiency. Okay. Sharita, I didn't see your question. Let me get it. What's the question? How's my daily profit flight? What's it sitting at? It's up to $1.15 right now. Okay. I'll keep an eye on that one. I mean, $1.25, $1.30, I might adjust it a little bit. But if we start going back towards that 68.70, if we're going back towards 68.70, then we should get filled at that, maybe $1.30, $1.40 or so. I'm putting it in for $1.50. Obviously, I'm trying to get filled for $1.50. All right, Shrita, how do I change an individual quantity? Are you already in the trade, or are you looking to add it? Who's your broker? Who's your broker? I just want to see if I can show you the broker platform. Tasty Trade. Oh, easy. Okay, so you got the same chart that I do, right? What's the trade you're trying to put in? You trying to do that bonus trade? Okay. So the bonus trade, you're going to go SPX and the January 30th expiration. So we'll choose the 30th, which is out 8 days. And the trade I took this morning is I bought the. So this is really pretty straightforward to do this on the option chain itself. So you click on the 60. Where the heck is it? 69.30. Actually, let's go to the bonus trade that I posted where you get a slightly better fill and give yourself a little more wiggle room. I'm going to try to increase your probability to profit. So 45. All right. So January 30th, you buy the 45. So I'm just clicking on the ask price once. So over here, you can click. You see where my mouse is? If you click on buy and sell, you can change the action. So I want to buy this one. So I buy the 45 with one contract. Then I can click on the 55 on the bid price, and that issues a sell trade. And then I buy the 70. So it's a buy, sell, buy. Now, if I want to add the contracts, all I'm going to do is highlight. See, I'm highlighting the 69.55. Highlight the 69.55, and it will highlight in two spots. So you highlight it here in the option chain, and it highlights down here in the ticket. And if I highlight it and then add the quantity, this is the quantity down here. I just click on the quantity up. Click on it once. There. So now I'll zoom in so you can see this. So if I go, I'll do this from scratch. I buy the 45. Okay. I sell the 55. I buy the 70. I click on the 55 so I can add another contract. Let me get rid of my scribbles here. So once I highlight the middle, click on quantity. Now it's a 121 for that $1.65, $1.70. I got filled for $1.90.95 earlier. I still like this trade. Okay. So you buy, sell, buy, highlight, and then add the quantity. Now it's going to be a broken wing butterfly structure because it's a debit spread with a wider credit spread. And because the middle price is my common strike, I get that financed. Because the debit spread is 10 wide, the credit spread is 15 wide. That's how I can finance this trade. Right now, showing $1.65, $1.70, $1.75. Obviously, start high, start at like $1.90, $1.85, $1.80, and just kind of work it in until it gets filled. If you like the trade. Okay, hopefully that helps. David is unable to engineer options masterclass. Did you cover the items? Yep, we did. It's recorded. We talked about it. And also we kind of solidified our rules for participation weeks when we got good alignments versus bad alignments. Some levels we talked about adding in. I'm going to update the indicator for engineered options so we can get a 25% ATR. Okay, bonus not filled at $2. So I got filled at $1.90. I update that in Telegram. I got filled at $1.95. So I modified my level. And again, I'm still in all the trades. Like this trade, I'm still in. I'm in this trade at $1.65, and I'm in this trade at $1.95. So I'm playing it both ways. Like I'm going to take this trade. It's obviously a little bit more premium. I'm risking less total dollars. I'm also up another 10, 15 points, which gives me a little bit more room for error. Okay. But if I took the trade yesterday, so I can't go back and say, oh, I'm gonna get out of the trade. I'm not. I'm gonna hold the trade. I'll hold it. If we fall, if we're falling, like that could be good. So if price falls a little bit today, like fine. This becomes like a better structure, like out of the money, and hopefully the technicals look pretty clean. So let's keep an eye on the. This is my daily profit play trading now at 90 cents. I'm going to see if price will fall. If price will fall a little bit lower towards this 68.75 or so, that might be enough to get us filled for over $1 again. I'll keep an eye on this one. So let's see what happens. I don't want to see price just do nothing. If price just chops around here, obviously I'm going too far above and below to get the credit that I want. But if we fall another 10, 15 points, that might be enough to get us filled. So we're trading at 96 cents right now. I'm trying to get $1.50. I would settle for like $1.25 or better. If I'm going to make a modified trade, I might get $1.25 or better and still take the trade. I like the strikes. I think they're safe, but I'm obviously not going to take, $910 risk on this trade. I'd rather take, $8.50, $8.70, something in that ballpark. If you wanted to get out of the trade, meaning what? The one that I what? The first one where the strikes are 30. So if I want to get out of this trade here, okay. Right now I'm in the trade for, $1.65. Right now it's trading for $1.90-ish. So if I want to get out of the trade, I'd have to exit for a debit. So I go into my, my broker platform has the strikes right here. I labeled this so I can find it. So I have my 3 legs, the 30 by 40 by 55. I'm in for $1.65. Right now it's showing break even, maybe a small profit, which I don't believe. It's going to be probably showing a small loss. So if I want to close this trade, I just take the whole trade together and then close the position. And right now it looks like I can get out for maybe $1.90, $1.95, $1.85 if I'm lucky. So maybe I lose 20 to 30 bucks. If I don't want to be in the trade, I can close right now for a small, like $20, $30 loss. Create the labels. Yep. And Tasty Trade, that's really simple. Let me see. Let me do this. I'm going to take a new trade so I can show you. I'm going to do a trade. I talked about this morning. I like Pfizer, and I'm going to do this on I'm gonna do this for all my accounts here. This is gonna type about $6,500. I'm gonna go Pfizer, and I'll show you how I build a trade and label it. Okay, so I'm gonna go Pfizer option trade. I'm gonna go to the end of the year. I talked about this trade in an earlier session this morning. So 25, 3, and 20. I'm gonna put in 3 naked puts. Okay, and let me see if I can go a little bit further. Maybe a bit more premium. So Jan 2027, maybe we can get a bit more premium. 25, 23, and 20. Yeah, I like this trade better. Go out an extra, 30 days, grab $4 premium. Hopefully that will fill. See if we get filled for like 410. Let's do. So 410 is not filling. Let's try 405. Okay. 405 got filled. Good. All right. 405 is in. So I'll show you the trade. So I just did a trade on Pfizer. Can you see these strikes right here? So I sold the 25 put, sold the 23 put, sold the 20 put. Now I'm just going to call this a naked put combo. So what I do is I highlight the 3 trades in my broker platform, 1, 2, 3, right click, and then group positions. So if I go group positions, I can type in naked put combo, and I'll add parentheses project because it's going to be a project options edge position. So I pulled in 405 in the trade. Okay. Now I'm going to go through and get this in my other accounts. 405 not filling. Let's try 404. 404 filling. Good. 404 is getting filled pretty regularly. That's good. Let's do. Okay, I think we're looking good here. Getting filled at 405. 61. Okay. The heck. Oh, there we go. Okay. All right, I'm just getting these confirmed that I'm just going through my accounts. All right, almost there. So filled, filled, filled. All right. So that should be every account. Good, 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 good. Now I will update for project upside. So that was filled at 405 on almost every account. 405, 406. All right. So we're going to go project options edge. Why you didn't do a plain selling of a put instead of the arrangement you did? What's wrong with what I did? I mean, I'm okay owning a chunk of shares. I just don't want to do 3 contracts at a 25 strike. because what I'm doing with this combo is I lower my strike price. This is where doing the math, calculating a break even makes sense to me. Look, Pfizer is trading at $26. I don't want to buy it at $26. If I'm going to own it, I want to own it cheaper to give me a better chance of profit. So here's how this trade works. I got filled for 405. Okay, 405 divided by 3 means I took off an extra $1.35 of credit. So I have my sell 25 put, sell 23 put, and sell 20 put for 405 credit. Okay, so divided by 3 equals $1.35. So that's going to be a net discount. All right. Everybody following the math on that? So if I were to own shares at 25 and 23 and 20, that's a 22.66 break even. So if I just own the shares, that's my break even. With the credit from the naked puts, I get an extra $1.35 off of this. So 22.66 minus $1.35, my break even price is 21.31. So if assigned on all 300 shares at all 3 strikes, my break-even price equals 21.31. I'll put 21.32 since it's 6.6 repeating. So my break-even price is 21.32. Okay. And if you get assigned, you can get dividends. Exactly. And if I get assigned and I own shares, I'll get a 6.64% dividend for as long as they want to maintain that. If they go up with it, great. If they go down with it, that's fine. That's still better than a risk-free rate. You know, I mean, and granted, it's not a risk-free trade on Pfizer. There's obviously volatility here. But if we're going to carve out a bottom, 21.32 is down here. 21.32 is a break even. That's literally, Liberation Day lows. So if the price goes up, do I take any assignment? If price goes up, do I take any assignment? No. And I just keep the $405 of income. So at the very least, that's hopefully going to be my probability trade is if price goes higher, I'm getting $400. If price goes sideways and I get assigned at 25 and that's my only strike I get assigned at, that's fine. I'll get assigned at 25, but I still get the 405 credit. Okay. So off the 25, I can take away my $1.35 for my break-even price, but I still keep the remainder for income. So my technical trade on the 23 and the 20, the put credit, I'll just keep it. So I get paid for the income, and then I can do this one as ownership and try to hold this. My target on this one, by the way, is $35. If we get to like $34, $35, I'm taking $10 a share, and I'm going to take the money. If it's only 100 shares and I make $1,000 here, great. I'll take $1,000 on Pfizer, and I'll keep the credit from these trades for another $4. So I think right now we have a trade where there's, in my opinion, there's going to be some limited downside where some value and a company that does have pretty good cash flow and, should have upward targets of like $50 to $55. But yes, you need about $6,500 of cash to take this trade. Okay. Because if I own 300 shares at 21.32, 300 shares at 21.32 is going to be about $6,400. So that's going to be your net allocation. If you don't have that cash, then don't take the trade. But what I want to show is it's a fresh trade. I can label it in my broker platform, and then it's a trade I can throw out for Project Options Edge. Okay, so new trade. Pfizer. Let me find the tracker here. This is going to be like trade 90 something. We're at trade 96. Today's the 22nd. Pfizer, I'm doing the one. Is it 121, 115, 115.27? So it's essentially a leap. I'm going out, 12 months. Sell the 25 put, sell the 23 put, and sell the 20 put. 405 credit. Okay. Trades in. Is this level 3 or 4? No. This could literally be like a level 2, I think. So if you have the cash for it, you have $6,500. As long as you have the cash for it, I mean, the broker should let you do a cash secured put, and that's with all three strikes. So if you have $6,500, you should have enough cash that you can take the trade with like a level, probably a level 2. I don't know if broker, like, a naked put, it's like, okay, but if you have the cash for it, it's not margin, you know. So I don't know. You check with the broker, but I would imagine a level 2, level 3 will definitely do the trick. Okay. And I'll put this in. So new trade. This is going to be trade number 96. Pfizer. And 405 credit filled. This is a naked put combo for Pfizer. I'm willing to own shares at all three strikes. My break even, if assigned on all three levels, is 21.32. Yep, 21.32. My, upward price target on Pfizer is $34 to $35. If no shares are assigned, we'll keep the 405 income. If we have shares assigned, I'll add covered calls and look to generate $500 to $1,000 income. Okay. Because if I looked out, let's say we get an assignment on Pfizer. Okay, let's say the price is trading at $23 and all of a sudden the broker's like, oh, this guy's got a $25 put. We're going to make him sell it. Okay. Or make him own it. So then I would go out like 30 to 45 days and look and see what, at the money strike is. Like I could probably get a covered call for like 50, 60 cents. And if I did that on 100 shares, I'm, making 50, 60 bucks. I get it called away. Try to get this up where, the downside of Pfizer is you're not getting a lot of premium. Okay. So if I do a covered call, I'm not getting a ton of covered call premium. So what I would plan to do is if price can naturally appreciate to $30, $31, $32, then I start looking at selling covered calls when I'm at a strike price that I want to get rid of it. So if we're at $34, sell a $34 strike, collect maybe 50 to 60 extra cents. If it gets called away, it's at the price you want to let it go, and you get an extra chunk on top of that. So I probably won't cover it too aggressively unless I just want to get out of it. Okay. So, but more than likely, the trade really to me is I don't really want the assignment. Like the assignment's fine because I get a dividend and I think price can go higher. But if I don't get assigned, I'd rather just make the $400. Okay. Would you check to see if the dividends occur? Well, it depends on where your strike is at, David. If you set a call strike, so if price is at, let's say price is at $30 and you do a $29 cover call, you're not going to get a dividend. If you have a sell call at 29, you're not going to get a dividend. So you want to set that dividend, you want to set that call strike slightly out of the money, around a dividend expiration or dividend timeline. You want to be just slightly above the current price of the asset. For them to declare a dividend, you don't want to sell call below that price, below like the current price. Does that make sense? No, it's $6,200, Arturo, not 62 grand. Like $6,400 is all you need. Big difference. If I was doing 60 grand, I'd be owning the freaking SPY, not Pfizer. So anyway, all right, we'll see. We'll see what happens. I'll set a chart alarm here, 25, 24, just kind of get a heads up. You can see I've got chart alarm set So this is why my price targets are on $34. It's a 38% fib from a bigger swing, like a weekly chart, weekly swing. If price can kind of stabilize in here and work its way higher, I could see us going to $34. I could also see this going, let's say it breaks a trend line, comes back down to the lows, using this area as support. I could see that trade. So one thing I might also do is I might just buy some shares. If we come back down to $21 or so, I might just buy some shares and see if that goes back to like $30. Then you get some price appreciation on the shares. You can have the put side with the trade I just took. But yeah, I don't know it's a boring stock. I mean, don't get excited about Pfizer. Okay. But it's $405 of income that I think is pretty reliable. And if I get assigned anything, I get a dividend. I'm at a low price. I think there's good upside potential on the stock. So that's why I'm in it. Can you sell one? Yeah, you can sell one. If you're to sell one, if you just sold one, then let's talk about the strike. Like, what strike would you choose? If I did the January 2027, if you just want to sell one strike, then maybe the 25. Okay. Or if you're just going to do one strike, then you might as well make it interesting. 27 by 25. Okay. Now this isn't a fantastic trade. It's $100 of income, but it's a good way to lower your cost basis. So you could do a naked put at 208, or you could do a 27 by 25 ratio spread, and 25 is the assignment price. Take away $2 and take away $1.03. My break-even price is $21.97. So if I did a ratio spread, my break-even is $21.97. If I just did a naked put, my break-even is $22.92. That might not seem like a big deal, but if you're lowering the cost by another dollar, I like the trade better. And that ties up less capital, right? If I did a 27 by 25, I can still get $100 of income. I'm only tying up about $2,200 of buy power. And if I own the shares, my break even would be 25 minus 2, because that's my profit trap on the ratio spread, and then the $3. Oops, I guess $3. So about 21.90, 21.91 would be my break even. Again, we've got lows at like 21.30. So you're not that far off from like pretty good lows. If there's upside appreciation, take it up to $30, $34. Yep. So that's not a bad way to do it. Plus you lower the cost basis if you like it. That way you get some premium. Okay. If you go a little bit higher, same type of thing here, 30 by 27. Now you get a $3 profit trap. You're collecting a little bit more, 85 cents. It's not a big income trade. But if I took the assignment, my break-even price, 27 minus 3 minus 85. I'd own the shares at 23. Obviously, I want the shares as low as possible, so that trade's probably not great. Just do this one. I like this one better. 27 by 25 is a better ratio spread. You still get $100 of income. I've taken plenty of those trades where it's like, just give me $100. This trade, give me $100. Do that, 100 times, you can make some money, right? If I have a trade that's $100 and I take 100 trades, it's 10 grand. It's just trading. If you took the assignment, flip it, repair it, try to grab another $200, $300, $500. This is where you just use your capital. Doug says, my Schwab IRA won't let me do naked options or naked positions, so I do a put credit 25 by 18 for $1.95. That's good. That's good. So that, and the cost basis there, right, Doug? So if you get assigned at 25, then you can take off that $1.95, right? So 25 minus $1.95, your break even is 23.05. Yep. So because the reality is you're probably not going to see Pfizer go below 18, right? Because otherwise, like, that long put would be a hedge for you, but it's not going to be a hedge. I don't think we're going below 18. If Pfizer drops to 15, then you can, lower your cost basis a little bit more, but you're still going to be probably up above price. Still, I get it though. You're just going to wider spread so you can take the trade. Good income though. $1.95 is not bad. Okay, cool. All right. That was fun and interesting. Yeah. So anything, geez, Pete's. Is nothing happening today? Is price just doing chop suey? All right, I'm going to let the daily profit play trade sit and marinate for the remainder of the day. If we get some direction one way or the other, I mean, if we come down here, maybe there's enough to get a fill. I will still keep an eye on this one. It's trading for like 90 cents right now. I want over $1.25. So if we see some direction to the downside or to the upside, I'll keep an eye on this one. But I'm going to need to see some direction on daily profit to get filled. So if it's just going to be like a big fat boring day, like after wild crazy volatility on Monday or Tuesday rather, and Wednesday, maybe today makes sense. It's going to be more of a chill day. Um, I'm just, I don't know. I'm playing it a little more conservative, just in case. We've got plus or minus gamma here at 68.70. We got a big gamma level at 69.50. If price is going to get directional, I'm just trying to stay out of the way for hopefully a decent fill. Yep. So I'm not taking the trade right now. It's at 85.90 cents. Now it's at 76. I mean, the most I saw in that trade was, I don't think I saw like $1. I think I saw $1.05 maybe. So anyway, we'll see. If there's some direction, we can maybe get this thing up to 120, 125. I would still consider the trade. But at 80 cents, I'm not that interested. So right now I'm going to just sit on my hands. Okay. All right. Blake, you with me? Because I'd like to get it. Let me get a stream up and running. If we get it handy, let's get a stream up for engineered options. We did a nice masterclass yesterday. And I would say for our masterclass, these are the notes. So masterclass and what we are doing for some of our trades. We put in a little bit more concrete rules on whether we're in the right alignments or not. I'm still going to participate on a regular basis, but we discussed that yesterday, and we also discussed trading gold and silver. Not that I want to trade the noise of gold and silver on a weekly time frame. This is going to be one of my bolder forecasts, but I still think that by the end of March, we're going to see gold making some type of push and some type of correction to the downside. I don't know. I don't know if this is the case. I think technically this chart is essentially broken if we don't. So we're at over 580 bars right now, and 600 plus bars. I'm guessing that if we're up here, there's going to be some type of reason for gold to start coming back. Now, what I don't know is how, what, why. Gold is such a crowded trade right now when everyone loves it. It just seems like, why would you ever dump your gold positions? It's just going to go higher. I agree. But if there's heavy positioning here, especially if there's like heavy call option volume, I could see those like loose hands getting shaken out at the top. I could see, something similar to this happening. But instead of having this high, low, and now we're back to all-time highs, I could see a high, low, and then one more push lower. That's all I want. I'm going to buy that dip and I'm going to position for long-term gold. So anyway, I said yesterday in the masterclass, I mean, if we get a pullback into this level, then we can start looking at engineered options for ways to do like monthly trades on gold, which I think will be good to participate. Okay, so that masterclass should be posted hopefully today, and then I'll get the notes added to that as well. Cool. And Blake, if you're with me, let's see if we can fire up a stream for engineered options. We have trades looking pretty good right now. With obviously this week's cooperation, we got a monthly trade looking good. We got a weekly trade looking good. So we'll just see where everything kind of settles in for next Monday. And then the end of the month is Friday next week. So if we're above, our set levels, then we'll be sitting pretty for a couple of winners. All right, let me see something here. All right. So what do we do for today's recap? We have a pending order for daily profit play. I'll keep an eye on it. I know as time passes, this one may not be a fill today, which is okay. If the market's going to chill, that's out of my hands, but I'm just playing it safe. We got a couple bonus trades in for that 69.30 to 69.55 area. I think those are decent trades. If I'm even remotely right on, let me go this chart here. If I'm even remotely right on this formation, which is a rising wedge, the market should have a difficult time getting to all-time highs. So if this is, break, retest, struggle, revisit the lows, this does open up more to the downside. Mag 7 next week with earnings. We have several Mag 7 companies next week reporting earnings. I'm not saying that the market can't, beat expectations, but if it's a little bit lackluster or there's any acknowledgement of the CapEx spending, The market might not love that. I don't know. But also on top of Mag 7, you got freaking Fed, FOMC. It's Powell. I'm sure there's some drama coming out of that where if he says, labor market this or inflation this or yields are going up and blah, 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 the market might react adversely to that too. Not sure. I'm just trying to play out. This is a technical pattern. Whatever is said in the markets, we also have core PCE next week, so we'll see. Inflation's going lower. I think that the markets is less concerned about inflation, more concerned about labor at this time. Okay. So your breaking news: U.S. and China approved a deal to sell TikTok's U.S. business to Oracle. One good thing happening for Oracle, huh? Market doesn't seem to care. Oracle was a nice trade in 2025. I wouldn't touch this thing. There's a reason it's down. The market's not giving it really any love. So I think that was a trade that was already profitable. Let me make sure that is not in the portfolio. I think I'm out altogether. Correct. So I have no Oracle exposure. That trade is done. Cannot enter the. Are you talking about the Pfizer trade there, Kirk? Is it because of the naked puts? Is it because your platform won't let you? Are you restricted on your Schwab permissions? Lester, you can reach me. So any members can reach me. Chris Pulver Pub at gmail.com. Chris Pulver Pub at gmail.com. That's the one I check every day. So what's the deal, Kirk? Cannot enter the Pfizer trade. Okay, I mean, tell me why. Is it not filling at 405? Is it going to fill at 403, 402? Do you not have permission to take the trade? Do you not have the cash to take the trade? Oracle ratio spread 125, 120. Yeah, I like that. Larry, I can tell you've been with me for a little bit because what are you using? Liberation Day lows, 120 by 125 by 120. What's your expiration? You going out like summer, like end of the year? That's, I mean, probably not a bad trade. Oracle. Before the election, if we went to like September, that's out 200 some days. That should be decent. 200. Oh yeah, dude. They do not take the 3 legs. Okay. I mean, if they don't take 3 legs, then you can just do the 25 sell put, execute that trade. 23 sell put, execute that trade. 20 sell put, execute the trade. You can do one at a time if it doesn't take all 3. If you have the cash, if you like the trade, right? If you don't have the cash, you want to do just a one, you want to do like one strike, then that 27 by 25 is decent. Yep, I saw that. And apparently they're getting approved to get the TikTok US side to Oracle. So Larry, I like the trade, man. I'm gonna try. I might go a little bit wider here. Let me go 130 by 120. Maybe get a $10 wide profit trap. That's not a bad trade. That's $400. I mean, my issue is, do I love Oracle? Not really. So even 265 with $1,000 profit trap, 200, 185. Like this one's not bad. I go 115, 105. I get $1,000 profit trap. I'm outside of the expected move. I'm getting over $220 of income. Let me look at the fundamental side of Oracle. The one thing I just didn't love about Oracle is just the straight up debt. They're like, yep, we're going to spend, we're going to raise, we need all this debt. We need to do this for AI. But price to earnings, 32. I mean, it's fair valued. So this is before like, policy drama. This is before midterm stuff. Yeah, I'm going to take this trade, man. I'm going to give myself a little bit more wiggle room here. This would be $300 of income with a $500 trap. This is going to lower my delta a little bit. So now my delta is only a 5 versus 7. If I just did a naked put, it's a 16. So I'm going to go buy the 115, sell the 105, get over 200 bucks, hopefully 220, 215 or so. And I'd be willing to take on the shares, but I would just repair it. I'd quickly flip it. So this would be a trade for my margin accounts. To speak about the Microsoft bonus trade last week. Well, it wasn't a bonus trade, Sean. That was a newsbreakers. And we have earnings next week. So really that trade's kind of all about earnings next week for Microsoft. So that's going to be based on the earnings reaction on the 28th. Yeah, I know. But I did it officially for my newsbreakers, so it's in there. It's the newsbreakers trade. I'll look at it though. Give me a second. So let me see if I can get this trade in. 115, 105, September 18th. This is before the midterm stuff. Let's see. If the AI narrator can stay alive and well, TikTok's getting some love with Oracle. Great. I don't know. But the probability of profit is about 90%. Assignment and break even price would be down to like a 5 or 6 delta. Like that's such a low probability right now of having really any trouble in the trade. So let me see if I can get this thing for if I'm getting a generous fill, I'll try 225. 225 not filling. Let's try 220. 215. All right, got filled at 215. All right, 217. 215. Okay, this is a trade for my margin accounts. That's the way I'm going to set it up. It's a little bit less buy power. Definitely like Oracle for repair or an income trade, not a buy and hold flip trade. Let's try this one. $215, $214. Okay. $214's having no problem getting filled. Okay. All right. Margin account's getting some love there. That is a 115 by 105. This will be trade number 97. That's a 9/18 expiration. And then 2/14 credit. Filled. So we have a 90% probability of profit, about a 8% chance of assignment. If Oracle is less than 105, I'll take the assignment and quickly repair for, let's say, $5 to $10 profit. It's going to put 500 to $1,000. Okay. The 105 area is below the April 2025 lows. So I think it's a good spot to be positioning. Trade number 97, Oracle, 122, 9/18/26. All right. Trade is in the tracker in Telegram. Okay. Kaylee says, I'm a little confused. Yep. So this is the trade structure. So it's a ratio spread. And what that looks like is this. I go Oracle. Okay. This is why, just having a couple of go-to strategies helps. Don't be confused with, wait, he's buying a put and selling a put. Isn't that a debit spread? Not the way we're structuring it. Because what I'm doing on this is I'm doing a ratio spread because I have more strikes on the 105. So I'm going out to September. I am buying the 115 put and I'm selling the 105. So this is what the trade looks like. Oracle right now is trading at about $177. That's the actual price. That's the actual price of the asset. Oh my gosh. This chair's killing me and my 30-pound bowling ball dog is sitting on my lap. Okay, so this is the asset price of Oracle. So what I'm doing is I am buying a put out of the money that is really, really cheap. So right here is my 115 that I'm buying. Okay. So what happens when I buy a put? When I buy a put, I get paid if price goes down. Correct? So when I buy 115 put, what does this do for price? Well, if price is here and price falls all the way down below 115, that's why you can see this profit because I'd be getting paid on the 115. Now the 105 is a $10 profit trap because I have a 115 and a 105. So this is essentially the trade. Okay. The way I constructed a ratio trade is I buy the 115 for one contract, and then I sell the 105 and I sell the 105. That make sense? So the reason that trade works for me is if I buy the 115 by 105, that's a $10 wide profit trap. So what that helps me do is I'm basically taking a fancy trade that would be similar to just doing a naked put. If I do a naked put at 105, great. I tell the broker, hey, I'm willing to own shares of Oracle at 105. What are you going to give me for it? And the broker says, well, at the 105 strike, you can own Oracle with a credit of $3.70. Okay. So that's all I did. If I just wanted income, I just sell a 105 and collect 370. Okay. Now, this is why I tend to do ratio spreads. Watch. 105 is my assignment on a naked put. I pull $3.70 credit. My ownership price would be 101.30. Okay. 101.30. That's fine. So I would be willing to own Oracle at 105. My break-even price with the credit that I receive is 101.30. Okay, so I'll write that down. 101.30, and that's with a naked put. Now, if I do a ratio spread, the 115 by 105 is a $10 profit trap. So I take the 105 assignment price, I take away the profit trap that I would be getting profit for, and I take away my $2.14. Now I own shares of Oracle at 92.86. If given the choice, where would you rather own Oracle? If you had to take the assignment, where would you rather own Oracle? At 101 or at 92? That's a question for everybody. Not just Kaylee, for everybody. Do I want to own the shares at 101 or 93? I'm assuming, yeah, if we do some math, 93 seems like a lot better break even price. Okay. Now, what's the trade off? Well, I only made $2.14. If I just do a naked put, I make $3.70. So the trade off is I don't get as much credit. Okay. But is it worth it to me to get the extra $1.50 of credit, or would it be better for me to save literally $900 in break even prices? To me, I'd rather sacrifice the $1.50 of income to save myself $900 if I was assigned the shares. I have a much lower break even price. That to me is better. Now, Sean says, I don't want it. Okay. If you don't want the shares, you can also manage this trade where you don't have to take the assignment. Here's how you do that. And I'll put this in the trade tracker, or Telegram. If you do not want to own shares, then manage the 105 put. So filled at 370. Let me make sure it got filled at 370. Let me just check one of these. So Oracle. By the way, Larry, if this trade doesn't work out, I blame you. I'm just kidding. Oracle. So I need to see. So 378, 383. So 378, 383. So that's about my credit. So I'm gonna put 378. I'll just go 380 credit. 380 credit. So consider stopping out at. So you take your 380 credit. 380. So 1140. 1140 or 15.20 for a manageable loss. Okay. So if I pull in, if the put side credit is $3.80 and I close it for 1140, I'm taking a loss of just under $800. Okay. If you don't want the shares, you don't want to tie up, basically $9,000 of cash to own the shares, then you could just manage the trade for an $800 loss. That's still very manageable. Okay. If you want to go a little bit higher and keep the probability slightly higher, then you take the stop loss at 1520 and you're losing about $1,100 on the trade. Again, something you can always survive and come back from. If I'm down $1,000, give me, I don't know, 3 trades, 4 trades, 10 trades, carve it back, more trades, keep trading, stay in the game. Okay. All right. So would it work the same result if we buy and sell put in 2 separate transactions? It should, but before you execute those trades, do the math on that, Kaylee. So I would do, let me see 1 second here. If I did the 105, okay, so if I bought the 115, I'm going to spend, here's how you know if you can get a decent fill. What is the broker offering for the fill? If I were to buy the 115, what's the ask price? Just say it's 555 debit. Okay, so 555 debit is going to be what it costs me to take that trade. The 105 credit, the sell put, and I do 2 of those, 370 credit, that would be 555. So 5.55 minus 3.70 minus 3.70. So right now, if I just do it based on that, I should be getting about $1.85. Now, the way that I put this trade together with a ratio spread is I either had a little bit more premium on the sell put or I had a little bit less of a debit on the buy put. So what I'm saying is when you take these trades individually, you want to try to shave off a little bit off of this price. So you want to have a lesser debit or you want to have a slightly bigger credit. Because I got filled at $2.14. So I'm basically getting a 30-cent, I'm getting like a 30-cent bonus for me versus just taking it at the ask price and at the bid price. So somewhere my trade is like in the mid, which is good. So that'd be the only thing I'd be mindful of if you're taking the trades separately is you want to try to, discount your debit and try to increase your credit if you can. And that way you get filled at a slightly more favorable trade. Okay. All right. Hopefully that helps make some sense. All right. Blake, I just saw your comment there, dude. Yeah, it's all good, man. We'll fire it up. I think I'm good. I've got just another, yeah, I've got a meeting in a couple hours. No big deal. Okay, so you get on that, Kaylee, and then Arturo saying, can you repeat that? I mean, what do I need to repeat? Trade's been posted. It's a ratio spread versus a naked put. It's just doing the numbers. Here, I'll show you. If all I did was let me just do this. If I get rid of the ratio spread, okay, and I just do a naked put, here's what a naked put profile looks like. That makes sense? A Merrill platform. I don't have a Merrill platform. What is Merrill's platform? You're trading options in Merrill Lynch. Merrill Lynch trading platform. I have no idea what that looks like. Merrill Edge, self-directed stock trading. Let me see. It probably looks like every other broker platform in some way, shape, or form. This says, I mean, I just thought that was through Bank of America. Self-directed, Merrill Edge, Merrill Guided Investments, open an account. Do they even have a platform? Look, I don't know what it looks like. I see a Merrill account. It probably is some like basic web-based platform. Can you find option trades? Can you find like the asset, the expirations, the strike prices? Can you do that yourself? Okay. Um, Let me see. I'm honestly like, I'm gonna go to YouTube. So it's called Merrill Edge, I guess. Maybe that's just their fancy crap. Merrill Lynch trading platform. Merrill Edge versus Merrill Lynch. What's the difference? Trading platform, that's Interactive Brokers, Merrill Lynch trading review, trading tutorial. Okay. I mean, look, this is just, in 60 seconds what I can help with. Just go to YouTube and try to find your Merrill Lynch trading platform and see what they'll help with. This person did a video for 2 minutes on, here's the Merrill Edge trading platform, self-direct investors, tools, and portfolio stuff. That might get you started with how do you find it, right? So if you can find your assets, your expirations, your strikes, you can create the trade, create the tickets. That's what you're trying to do. Okay. If you've seen one platform, you've probably seen them all. So, I mean, I did videos on my channel, how to use a broker platform. See if it pops up in here. Platform. Yeah. I mean, if I had millions of followers, it pop up, but I know in my videos, let me go my channel here. So Chris Pulver trading or trade to be profitable. That's me. And I know if you search my videos for broker, trading 101, how to use a broker platform. Here's Fidelity. Here's Thinkorswim. Here's E-Trade. Here's Schwab Street Smart Edge. MT4. I should add another video. Here's one for, I need to do one on taste. It's like I did these a while ago. Anyway, there's help out there. Also ask them, if they want you to use their freaking platform, ask them. Right? They've got to have some videos and some education to help you get you acclimated. Right? You want to trade, that's how they get paid. You trade, you're active, they get paid on fees and commissions. So obviously, they want to set you up for success, hopefully. Yeah. So I didn't know they actually had a platform, but good for them. I'm sure it looks like every other platform that comes out, which is going to be something like web-based, and you still find your assets. And this is what for like every broker platform is going to be what you'll need is like the common denominator with every trade is you find your asset. Okay. You find your expiration. This is for option trading. So your asset, your expiration, And then once you find your expiration, which we were doing the September one, then you find your strikes. If they have an option chain, you'll have calls on one side, puts on the other side, and then you just create your ticket. There you go. There's a user guide from Pete. Okay, XSP 126. It's over 691. What do you do with it? Well, I'd like to make 100% profit on that, wouldn't you? What's it trading for right now? Right now, it's up about 68%. So, I mean, do we want to take the profit now? We've got 691. Let's check the strikes. So, if we go to a 686, what's my probability of profit on the 686? Right now, we have about a 78 to 79% chance it stays out of the money, which would give us a full winner by Monday. So, I mean, right now, it's like I really don't want to manage the trade. I mean, I can take the profit, but I did take a loss last week for 50 cents. I'd like to win 50 cents so I can make it back, as opposed to I take the winner now and I'm up 33 cents while I'm still in a small hole from last week. So I'm not going to micromanage the trade. You know, right now the option chain looks pretty decent. If we stay at 686, or I'm sorry, if we stay, you know, above 686, I'll make the full 50 cents profit. Next week, what's going to be interesting is because we have all the earnings and because we have Mag 7, I would imagine the market's going to be somewhat quiet going into all of that noise, and our expiration is on Monday. So I think as long as prices just kind of chill here for today, tomorrow, then next week is, you know, all about. And look, honestly, this doesn't surprise me at all. Where the market is sitting right now, where the market's sitting right now on a daily chart, I'm not surprised that at all going to next week, this market is a complete indecision zone. Because we break the structure. If we break the structure here, obviously there's no immediate follow through because we're pulling back yesterday and today. But where's the market at? It's right here where all of the traders that were caught off guard, I'm talking like big money, if the market's caught off guard by this correction, they're now break even, right? So if they wanted to hedge again, they can start hedging to the downside just in case the market rolls over. Or if they see this as a dip opportunity, they're not losing from the 3% pullback that the market just gave us. And they're going to, you know, position accordingly with either more upside or more downside. So going into next week, it's almost like at a perfect indecision spot where the market has to then make a decision based on the next catalyst. The next catalyst will be Fed. The next catalyst is Mag 7. You know, what are earnings going to give us for next week, get us in the end of the month. Okay. One more thing also for the month is look at the monthly candle. The month of January is just like we saw in November, break even, December, break even. Look at this crap. Isn't that wild? We're getting this tiny little nudge in January so far. So if the market can at least hang on to that in some way, shape, or form and finish the month positive, you know, that we don't roll anything over. But one thing I'll be cautious of is look at from April's low, let's just call that one candle, 2, 3, 4, 5, 6, 7, 8, 9, 10. Any type of candle series from 7 to 11 candles, we typically see like a cycle high or a cycle low. If anybody looks at like stochastics or subgraphs where you have like those big swings and oscillators, a lot of times that's going to be like up here oscillation wise, and it's due for some type of like, you know, flat or down. So I wouldn't be surprised if February, March, April is going to be a challenging window for the markets, just based on that cycle we saw from April to now. Yep. So all we need that trade to do is stay above 686. That's it. So I mean, right now it's up like 68% of max profit, 7% of max profit. That's fine. But if I took a loss last week, I'd like to have a 100% winner because all I have to do is stay above 686, which right now I have about an 80% chance of that happening. If I'm a numbers guy, I'm going to take that trade and I'm going to hang on to those probabilities. Okay. All right. So we'll keep an eye on that. And we'll spot check that stuff on Friday. That's probably one thing I can do for everyone this week is we did a masterclass yesterday. So what I'll probably do is either post a video for engineered options. Okay, I'll do an update on it today. Things are looking pretty good. We got one monthly trade that's running. We got one weekly trade that's running that have been filled on. So if those are looking good for profit, I obviously want to hang on to those and get those wins. Okay. What are the significance of the wicks at the top or bottom? I mean, the significant. What are the significant? What do you mean? I'm not sure what that question is. I mean, this was Liberation Day. All that is noise. We didn't know until after the fact, but what felt like systemic risk all of a sudden became the freaking pivot heard around the world. This was the birth of the taco trade in 2025. And the taco trade has been alive and well for literally 8 months. And that is Trump always chickens out. It literally is a thing. Wall Street has coined it. Wall Street is running with it. And we saw it this week. You play hard, we're going to steal Greenland by any means necessary. It's not a choice. We go to the economic summit and we say, no force necessary. Let's talk. Like, again, I'm not saying this is good or bad. It's just like, that's how Trump has operated. And I think the market is not stupid. The market was on its heels during Liberation Day because it was prepared for 10% tariffs and it was given 50% tariffs. It was given 20 to 100% tariffs. So it didn't know what to do with that. And then it went back to, we'll do like a blanket 10% across the board. We'll talk and who's going to deal with the U.S. Just completely change the narrative, right? And so every time we've seen a sell-off, the market's been rallying. That's called the taco trade. At some point it might fail, but I do think that Trump likes seeing the market all-time highs. He can't control it. He can't, but he does have a lot of influence. So when he, let's say, did he stop the market from going down 20% last year? No. So if the market goes down this year, believe me, you can taco the living death out of this thing, but it's still going to have volatility. But at some point when it realigns, it's like, I think you're just going to be surprised to see like how much noise there could be to the downside and how much reflexivity there is to the upside. And I could see a lot of this year being like, man, it's just a break-even week. It's just a break-even month. That is perfect for engineered options. It really, really is. That's all we need is if we get break-even trades or better, we will win 100% return on investments. That is by design. I almost feel like the timing of this service for engineered options, the construction of those trades it's in a perfect environment where the market is just like, maybe the market doesn't really give us really anything, but if all it can give us is break even, we can make money every single week. Right? So the question is, why is the wick shorter or longer on each side? That's all that is highs and lows. So that type of volatility that we talked about, I mean, if you remember April of 2025, the market was down 15% in the first week of the month, and it came battling back. So if you take this monthly candle, which opened here, low here, high here, close here, all that is in a monthly time frame. Go to a daily chart, you're going to see all those individual days of how the market got down 15% and then rally back up and then settled. That's what the wicks are. It's an open, high, low, close. So when you see the wicks like down like this, that just showed that there was a tremendous amount of bullish pressure to push this market back up and fight back. And that bullish pressure still had momentum and literally carried us into the entire year. So once we got through the drama of April, May, June, July, August, September, October, November, December, even now is still freaking bullish. That is crazy. So that's why I'm saying, like, we could have a rough patch for the next couple of months because getting into this type of reflexive rally and having some indecision near the top, I could see the market just being sideways, maybe having some pullbacks. If it goes a little bit higher, it's going to be so difficult for the market to make substantial gains. If we make substantial gains, we are talking about a blow off top, which can happen. And a blow off top is also leading us to bubble. At some point, there will be a big, nasty, ugly breakdown in the market, and we'll figure it out. It'll be challenging. It'll be high volatility. It'll be difficult. It'll be frustrating, but we'll figure it out. Okay. All right. Hopefully that helps. Shrita, good. Donna, good. Yep. Okay, good. You're welcome, Peter. All right. Hey, man, let's do this. Blake, let's go and fire up the engineered options session. Everyone's hanging out for today. Fire up that session. Engineered options. We had a masterclass yesterday. We have updated notes, and I'll do another masterclass, or if I don't, maybe not a masterclass, but at least a video. But if we have new students joining, then I'll throw another masterclass in for a small session on Friday. We'll talk about the trades we're in. We'll review a couple things, and I think I could sneak that in Friday around like 11:30 a.m. or something like that. Hopefully can. So that'll be a TBD for tomorrow. Anyway, Blake, go and take the screen if you can, and let's run engineered options for a little stream, and we'll come back and see how the rest of the day is looking. So still on freaking SPX daily profit play. Oh, son of a gun. All right, well, choppy price action on the 10 wide is now down to 40 cents. So there was a $60, $70 winner. I just didn't settle. Excuse me, I didn't settle for the crappy credit. That's all. We're at 69.10. Just a boring day. And it's not a huge surprise. It's just a boring day. And naturally, after having wild Tuesday, wild Wednesday, Thursday is boring. It makes sense. Market efficiency. But unfortunately, I didn't take advantage of that with a closer to the money premiums. I went a little bit wider, and I probably won't get filled today, but that's okay. I'll get the notes in for the classroom. Yep, I just had to update the notepad, and I'll get it in like a text file or a PDF. Okay, let me see if I'm missing anything. We good on comments? Yes. So look, pretty interesting day, right? We dove into daily profit play. I didn't get filled. That's fine. I'm still going to let that hang out for the day. Bonus trades on SPX. We'll see what those look like coming into the end of the month. Engineered option trades. We have 2 trades running, looking good for profit. We had a bonus trade today for Oracle. Bonus trade on Pfizer. Those are for Project Options Edge. And yeah, just another day at the office. All right, Blake.